Hey guys, Joe Frank here, market analyst for YouTrading, and in today's video, we're going to be taking a quick look across markets, talking about some of the themes that have been in play this week, and talking about how things could potentially play out for the rest of the week. So we can start here by looking at the S&P 500, which this is one-day candlesticks. We'll always look at one-day candlesticks. You can see it's hovering close to recent highs. Not really much by way of fresh catalysts uh, this week, apart from the new release of the virtual reality headset by Apple, which resulted in a bit of a pump in the Apple price, but then the pump sort of unwound because people were concerned about the price. It was $3,499 for this like headset, which was more than people were expecting, basically. But I mean, it hasn't really had an effect on the overall market. You can see the S&P 500 still consolidating below 4,300, still consolidating above. We were stuck in this upwards trend channel. Why is that not? Let me refresh that. Reload. But you can basically see we're in this upwards trend channel. We broke to the upside. Internet's blocked. That's better. Yeah, we broke to the upside of this upwards trend channel, and now we're in consolidation mode. I think we're probably going to see profit taking that takes us back to at least retest this upwards trend channel. But there's not that many by way of important catalysts out of the US this week. So I wouldn't expect too much excitement because the major catalysts that we've got coming up are all next week. US CPI and PPI data, the Fed on Wednesday. In fact, let's take a quick look at the calendar to make sure I don't miss out anything. But yeah, PPI, no, sorry, CPI next Tuesday, PPI next Wednesday, Fed next Wednesday as well, ECB too, which should be interesting for the Euro traders. Then retail sales, Empire State Manufacturing, Philly Fed Manufacturing, unemployment claims all on Thursday, so that's a big data dump that we need to be watching. Industrial production as well, important, as the manufacturing sector appears to be struggling according to the PMI surveys anyway. Then preliminary University of Michigan consumer sentiment report. Treasury currency report is more important for the currencies that are potentially being seen as manipulated, like the Swiss franc or you know the some of the emerging market ones, but not so much important for the assets that we're looking at. Um, but yes, a lot of important catalysts next week. We're going to see how sticky is inflation. We're going to get another update as to as well. We're expecting the Fed to hold interest rates at the 5% to 5.25% range, and their tone on the outlook for further interest rate hikes or interest rate cuts, their expectations as to where the economy is going, where inflation's going, how the bank crisis back in March is affecting things. All those things could affect sentiment. And ahead of those catalysts next week, it's probably not going to be too surprising to see a kind of range-bound, indecisive market. Anyway, let's look at a few other asset classes. Nasdaq 100 index pulling back a little bit, profit taking. I think you'd have to say is in play really here, but the uptrend remains pretty strong for now. You could say it's something along the lines of that. Are we going to get a pullback to test the 21-day moving average and the recent uptrend? Potentially. And if we do, that could potentially be like a 3% drop. I mean, let's have a look actually. Yeah, I got that almost bang on. About a 3% drop. I wouldn't read too much into that. Profit taking, just pure profit taking, can drive a move like that without any sort of change in the fundamentals. Dixie hovering close to recent highs. Talked about it in a trade idea video yesterday. We're testing this important downtrend, and depending on how things go next week. And I was saying that I think we're going to remain range bound between the recent low and the recent high. And depending on how things go next week, we could either break higher and test 200-day moving average and resistance in this upper 105 or mid 105s to 106 area, or we could continue uh, with this descending triangle that we've been forming in the last couple of months, last couple of quarters, actually, really. So that'd be important for the Dixie. For gold, quickly, you're actually seeing yields moving higher. We've got a nice 10 basis point pop in the 10-year yield for the US. And gold's not liking that. It's a non-yielding safe haven versus a yielding safe haven. So when the yield you get on the treasuries goes up, it makes gold comparatively less attractive. If the dollar also resumes its uptrend, then gold probably set to continue moving to the downside. Although there's always the chance that gold could still pop out of this downtrend. But the main thing I'm looking at here is, do we continue to respect this downtrend, and do we break below recent lows on the 100-day moving average? If the answer to both of those questions is yes, then a potential push lower towards 200-day moving average and the earlier yearly lows is a possibility. But this that would be a move that this trend channel would imply would happen over the next couple of months, or the next like 2 months. Maybe wouldn't read too much, or wouldn't predict that far out ahead. But you could at least be predicting a move back towards 1900, let's say. What else we got? We've got Bitcoin. I mean, this actually had some of the most interesting price action this week. You had the SEC suing Binance first and then Coinbase, causing this choppiness in Bitcoin. But the main thing really for Bitcoin is that it remains stuck below this downtrend, or within this downwards trend channel for now. And you'd have to think that near-term upside remains limited. Although, for now, we're still holding above support in this area. We had this nice rebound from it. So, yeah, I mean, maybe we're either building for a big drop below that key support area, or maybe we're going to break back higher again. We'll have to wait and see. Finally, oil. The effect of that 1 million barrel per day output cut from the Saudis really didn't last that long. Pretty much got reversed in one day at the upside related to that. We still remain in this longer term downtrend. We're still in a situation where China's reopening, when they ended their zero COVID policy and everything. The economic boost from that appears to have been fading quicker than expected. US economy still seems to be maybe not heading towards recession, but at least slowing. So, the macro picture is not great for a pickup in oil. Although the OPEC output cut, now the Saudi output cut, a lot of people talking about how oil markets are going to be in a big deficit. So maybe we can push higher and test the top of this trend channel and the 200-day moving average, which is around $80 per barrel for the front month WTI future. And if we did break above this downtrend, then, potentially a retest of the post-OPEC output cut highs, potentially even a move back to this double top from last October. Well, last October into November. Some of the things to be watching. But yeah, main macro catalysts that are really going to be moving things aren't until next week. US CPI, Fed, retail sales, the regional manufacturing reports, PPI, and then of course there's a couple of other things as well, like ECB meeting. If you're in the UK, you got like jobs data, GDP, and outside you got the BOJ as well. Quite a few things to be watching next week, less this week. I mean, what have we got? Canadian jobs data, Chinese inflation. Chinese inflation will be interesting because we want to see what room the PBOC has to up the stimulus to support the economy. But inflationary pressures in China remain very much subdued at the moment. Never really got hot in China like it did elsewhere, mostly because of the fact that they were in that perpetual state of lockdown, which never allowed that big boom, reopening boom that we had in so many other economies. Of course, they've got other problems as well, like an ongoing property crisis, or a slow burning deleveraging of the formerly overly inflated property sector. You could perhaps describe that as. But yeah, other than that, nothing really for the rest of this week. So guys, hope you all enjoyed the video. Hope you all found it informative, and I will see you all in the next one.